Hello friends, welcome back to another video. The TradeDesk Incorporated, ticker symbol TTD, has almost dropped 40% in the last 4 months. And in this video, I want to discuss with you my thoughts on this stock, as this is one of the rare growth companies that are already profitable. So let's go over their business model and financials to see if it is a good time to buy the stock or if there could be more pain ahead. Before we get going, I would really appreciate if you can click the like button and subscribe to my channel, as this will motivate me to make more such videos. So let's take a quick look at the company's business model before we get into their financials and valuation. TradeDesk is basically a software platform that helps advertisers to make the best use of their advertising budgets. The platform is used by top companies all over the world to place advertisements both online and offline, and the platform allows the advertisers to target the best suitable viewers with the most effective advertisements, thereby increasing the probability of converting such viewers into customers. TradeDesk works directly with some of the largest corporations across the world, as well as advertising agencies servicing these companies, thereby facilitating a win-win situation, as they do not need to compete with advertising agencies to win business contracts with the corporations. TradeDesk has also consistently reported a customer retention rate of over 95%, which basically shows that once they sign up a customer onto their platform, they tend to stick around. In terms of their financials, the company's revenues have grown consistently over the last several years, and for 2021, they brought in revenues of $1.2 billion, up 43% from the revenues they reported for 2020. The company is also profitable and reported a diluted earnings per share of 28 cents for 2021, down from 50 cents reported for 2020. The company also brings in remarkable free cash flows, and for 2021, they generated $320 million in free cash flows. This gives the company a lot of flexibility to grow their business by investing in research and development, as well as offer protection during an economic slowdown. Moving on, their gross margins are also typically in the 80% range, and their net margin for 2021 was 11.51%. TradeDesk financial position is also very strong, with almost negligible debt and cash in hand of almost $1 billion. In terms of guidance for 2022, management expects the Q1 revenues to be at least $303 million, which would be a growth of 38% on an year-over-year basis. The adjusted EBITDA is expected to be around $91 million for Q1 2022. Management didn't provide guidance for the full year, but based on analyst estimates, the full year revenue is expected to be around $1.6 billion, or around 33% higher compared to 2021. Now coming to the valuation, TradeDesk is currently trading with a market capitalization of $33.4 billion, which translates to a price to sales ratio of around 28. So just looking at this metric, it is probably safe to say that the stock is still richly valued, but the valuation has certainly come down a lot in the last few months, almost being cut in half, mainly due to the macro environment not being currently favorable to growth stocks. Let's now try and estimate using some scenarios how the stock price could evolve over the next 5 years to find what we can expect in terms of a return if we buy the stock at the current price. So here are 3 scenarios with different annual revenue growth projections of 20, 25 and 30% over the next 5 years. I am also assigning a more reasonable price to sales ratio of 5, 8 and 10 to these scenarios just to be conservative, and as you can see here, we lose money under both scenario 1 and 2 and make a very modest return if scenario 3 plays out, assuming we buy the stock at the current price of around $69. Looking at this, I think the stock is certainly not undervalued at the moment, but I still believe that TradeDesk has very strong growth prospects for the next decade. So I think it is reasonable to expect the companies to grow revenues in the 25 to 30% range annually over the next 5 years, as mentioned here under scenarios 2 and 3. But from an investment perspective, I think we should be cautious of the valuation at the current levels, so I'd be more comfortable buying the stock in the $30 to $40 range, as this will help provide a good margin of safety against any future headwinds, like a prolonged economic slowdown or a price to sales or price to earnings contraction. With that being said, I plan to sell $40 put options expiring in October 2022, which would give me a return of around $250 at an annualized rate of 11% with a downside protection of almost 42%. If you have any questions about this trade or about options trading in general, let me know in the comments and I'll be happy to help. And do let me know what you think about TradeDesk and whether you plan to invest in the stock. And if you like this video, please don't forget to hit the like button and subscribe to my channel. And as a friendly reminder, I'm not a licensed investment advisor, So always do your own research before making any investment decisions. That's it for now. You have a great day and I'll see you in the next video.